All right, let's take a look at Nano Dimension, or NNDM. I had a request here from somebody on the YouTube channel, and I want to check it out for you guys. Keep in mind, it's not a recommendation to buy, sell, or trade the stock. It's just my own opinion. Always be careful with these things, and if you want to do some requests, always, we can go into our Discord channel and do some requests there as well. Now, there's a lot of stuff on this NNDM stock. I guess Kathy Wood's buying it. Who cares? It doesn't really matter. But there's a bunch of videos on here that people will take a look at, pushing stock prices and that kind of stuff. Normally, I don't buy or look into any of these things. I just want to show you that there's a lot of pump. And when you look at something like this, there's just always a lot of pump and hype when it comes to stocks that are cheap. And that is because people get sucked into the stories. They get sucked into, oh my God, that's a great thing. That sounds amazing, and that kind of stuff. So as you look into something like this, it's 3D printing. It seems cool. It's a new technology. You get sucked into it, and then you're like, I'm going to put all my money into it. So if you got 10 grand to invest, people put in 10 grand and then they blow it, and nothing happens with the stock. Now, remember what's happening. The way that you trade these types of stocks, this is kind of a cheap stock, right? Looking at a cheap stock, it's not one that people are holding as a core investment. The way that you trade these types of stock is you go in and let's say you got a portfolio that's, tiered layered right here. And we're going to do like a couple different layers of portfolio. So you've got like a core portfolio here. And then here, there's like great stuff like maybe Microsoft or like, some core positions. But then in this basket, this is kind of like your speculative amount. And this is your NNDM and other stocks. And you might have like 10 of these, right? And this could be, let's say you're doing a $10,000 account. This is like $1,000, and you split like $200 in this stock, $200 in this stock, $200 in this stock, and so on. But then $9,000 is spread amongst like maybe Microsoft or Procter & Gamble or American Express or these other core holdings and positions. But these types of stocks, they are speculative, and because they're speculative, you put a tiny bit of cash in them. So 1%, 2%, 3% of your portfolio is small. They're speculative. Put a tiny bit of money. Everything else should be in a huge core basket. And then for these stocks, it's going to be a small little blip over here amount of your cash. So anyway, looking at the stock, as we evaluate it, I've seen this play out before where these things, they take off, they sound really good, and it just dies down. Then they do a stock split, which you can see happened right over here. So right there, 1 for 10. So for every 1 share you have, now you get 10 shares. Yeah, it sounds great because when it pops, you'll get more. But it's their way to just kind of pump up the price again, or try to. And it still kept going down. And then right here, it's trying to pump up a little bit. I guess there's some news or something. Somebody's buying into it. Kathy Wood maybe, or who cares? It doesn't matter. It'll fly into it. The people are buying into it. They feel good about it. Oh yeah, the stock's going to go to the moon. And then, yeah, it got into some higher prices back into about 20. And that's fine. But then again, you die down. And that's what they typically do. It's called compounding. What they'll do is they'll recompound. And eventually, if this keeps going down, they might do another 1 for 10 stock split. And you get more shares, and you keep staying with the stock. So that way you're not dumping it. But what it usually ends up happening is that, 10 years down the road, you're holding on to this bagger and nothing really happened. You didn't get a dividend. You didn't get much of anything. So it's taking a shot, right? And the only way to do these to make them profitable is you're taking a shot at maybe like 10 or 20 different companies that are penny stocks. You're holding on to them, and maybe this one turns into, let's say, 50 grand from your $200 investment or something like that. It really just skyrockets, or 10 grand from 200 grand, whatever it is. It just really explodes. And then the rest of these are probably just a waste of money and garbage. So that's what you're looking at, is you're looking for one big shot. It's a huge risk with a huge payoff. But the only way to do that is you put little bits of capital to get that huge win, because out of, let's say, 50 trades or 50 investments, micro investments, you're looking for a huge explosion, but the other 48 or 49 are probably garbage. Maybe like 5 or 10 will work out kind of, you're breaking even or a little bit more money. Some are going to be small losses. Some are going to be huge losses, and maybe a few of these will explode. So for now, this stock's got not much going on for it. I would say any kind of pops are usually opportunities to sell or dump the stock, and that's kind of what you would really look for in general. Most of the time is that, anytime they pop, they get dumped. And that's just the nature of a lot of the cheaper stocks. And also you're going to have some issues right around the $10 range. It's a typical psychological level. You can see right there, same problem there, $10, where that stock is coming right into it, rejecting it, problem area, as you can see. So anyway, so you might have and find some value technically. Here's $3. Here's another price level. Just look at the swing points where it changed direction, about $1.42. But these are super cheap and usually not worth it. And if you are doing them, then use a tiny bit of cash, right? You got $1,000, $100 in this one. You got 50 grand, maybe $1,000. You got $1 million in your retirement account. Maybe you could put in 2, 3 grand, 5 grand in it. But you know, small, because you need like 10 or 20 other positions and speculative positions to make it worthwhile, because the payoff, you might win 1 out of 20, maybe 1 out of 40, who knows, but you're looking for a huge payoff. So be careful with these types of trades, no matter who's pumping them up, who, you know, talking about them, this is great, this is amazing. It really doesn't pan out and work out. I've just seen this industry way too long. It's just a lot of hype. People buy into the stories and say this is the next golden nugget, it's the next tulip. Be very cautious, and you might hate me for saying it, but that's just the nature of the market. And you can just see it right here. Here's a trend, here's a downward action. And if you look at the month to month, look at these, a lot of red months, right? You can't deny it. A lot of red months, there's some green months, but overall, there's a lot of red, more red bars than green bars. That's just the nature of the stock. You're looking for a huge payout, huge pop at some point, and that's why you get in it. But you got to spread your capital amongst different ones of these, because you don't know which one is actually going to pan out and work out. Anyways, thanks for joining me. Join the Discord channel if you want to request some of your own stocks and tickers. You can get that in the description, and I will see you next time.